There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Auvorian subs, traders, global folk, people that want to make a ton of money. Pay careful attention to most of my broadcasts. Yes, that is a homework assignment to listen to all of the ridiculous amount of recordings that I have put forth in many different factors. You can also Google my name. It is Steve Vetterl. I am the AP Chief Market Analyst, right? I am your risk guy. Sounds all fun and exciting, but little do I just offer in terms of profitability on a daily trading call outs, right? But what I do offer is hopefully some great theory in addition to trade setups, general pitfalls to avoid, and the like. So check out my Telegram channel. If you're not familiar with that, you could certainly hit up others inside the live stream chat room, which I rarely monitor. Sorry. You can always hit me up on Telegram with any questions that you may have. So let's get started. Again, for those of you just joining us, I try and do these calls. Pay careful attention to the next statement, 1 p.m. Eastern time, right? I don't get into the Eastern Standard Time or the Eastern, like it's Eastern time, right? We all pay attention, at least in our countries, to the hour change, in which case it would be EST. So, but it is Eastern time. I now live in Florida. I try and do these calls at 1 p.m. on Tuesday. No change, 10 a.m. on Saturday, right? And I think that brings a cooler factor personally to a ton of European subscribers because, let's face it, it's a little earlier in the day for everybody. So, including me. All right, so without further ado, let's take a look at the charts. So I'm going to start off with the Forex Factory calendar, forexfactory.com. It's a great place, very accurate, and very rarely ever off kilter or down, right? It's probably one of the more solid sites out there. This has a ton of traffic to it. So many of you listen to the stream like, Steve, you already say that every week. Well, we've had a lot of new subscribers join the crowd, so I always try and repeat that each week. Keeps everybody firm. Always pay attention to these times. Do remember that the casts, if I'm starting, at 8 after the hour, or sometimes I'll start at 7 or 8 after the hour, sometimes 10 after the hour. I try and look at this from an Eastern time zone perspective. It is different for different time zones around. So believe it or not, everything I just spent the, last 5 minutes explaining is the single number one reason why I see traders make mistakes. Oh, I forgot about the news story, or, be better than that, guys, okay? All right, so we're dealing with some holidays, obviously, last 2 days. Today's Tuesday. It'll be interesting to see what these CPI, which stands for Consumer Price Index, every country's got one that is a developed market. Take a look at them. They're ugly. We know that. Question is, when do they get better? I don't know the answer to that. Depends on how much interest rates rise. But I think central banks, at least ones that hopefully are as plugged in as our central bank here run by Jerome Powell, they are afraid to raise rates. Doesn't mean they won't do it, but they're afraid to raise them. because that's going to just put a halt to a lot of stuff. I mean, hell, the bond markets are, at least in terms of the credit markets here in the U.S., are all way ahead of that game. So just be on the lookout for these news stories. So if we jump over to the charts, I'm not going to go into equities because it has just been murderous in this region. So if you could see these charts here, they're all based on daily charts. They are a lot of Auvorian subs. I know that do trade these. Just know that I've been calling out mostly on daily charts. These are what's called dead cat bounces. So for those of you that have been paying attention, I always talk about what's called max pain in equity land, right? And it isn't just American equities. We could look at the European equities right here as well. These are the developed markets, broad-based indexes. I always suggest looking at an index that is capitalization weighted, right? Not stock price weighted like the Dow. So I don't even pay attention to the Dow, right? You don't ever see me make reference to this. It's a failed benchmark. It's old. Okay. You want something a little more broad. Russell 2000's a broad base of small cap companies. The Wilshire 5000, which is the one I prefer, is a benchmark of the 5,000 largest companies in this country. I think it's much more representative of market cap by equity rating in the US, right? Not something you see here. You have to go to Wilshire or Yahoo or Google or any of the big finance websites to see that performance. From a broad standpoint, it includes small cap, large, both mid and value and growth. So in any case, just a little bit on equities there, but more volatility comes from the NASDAQ and the Russell 2000 typically than would be for broader base, more conservative stocks that comprise the S&P, or in the case of DAX, which is more closely representative of the S&P, but from German company standpoint, you'll see Unilever, BMW, all the likes of those companies inside BASF, and so forth. So, yeah, it's pretty much all I want to say in equity land. Notice the complete fallout in prices of, I mean, it's crazy. Everybody's expecting. This just goes, but this is a great example, by the way. Look at all these, if we really had just like a potential for just ridiculous amounts of demand for copper, right? Would these charts be going down? Right? I need to like pop up the emoji, right? Wait a minute, demand's skyrocketing for chips that can't produce cars. Chip shortage, right? Global supply chain issues. What's going on? Why is the price falling? Canary in the coal mine. That's all I'm gonna say. I'll let you guys figure that one out. Then it goes. I could always be wrong, right? So, bond market. We're starting to see a rally. It's been totally oversold. I would expect this to be a dead cat bounce. But for those of you that just have to run and get a 30-year mortgage at a ridiculously higher rate than it was about 5 months ago, have at it. I would suggest that if rates do rise way back up somewhere in this area, you'll get a much better price on the mortgage. Doesn't mean you run out and refi 3 months later. It's not worth it. Spend all these extra costs to refi, depending upon your mortgage broker. It pays to take a look at lots of different mortgage brokers, discount shops out there. They do exist, right? Johnny on the corner at the local bank, even though he's Sally's husband and they're personal friends, doesn't mean that he's not going to blow your brains out when he tries to write a mortgage for you guys. Always be looking at more quotes, right? It's kind of like doctor visits. Get a second opinion. You're not sure about it? Get a third. I can't tell everybody how much the simple action of getting a second or third quote on anything. I don't care if it's your body or a repair, better value. So I'll just leave it at that. That probably sounds like I'm preaching to the choir, but again, I got all kinds of buddies out there, smart guys, but they're too lazy to get that second and third estimate like I always do, right? and it's been just a waste of their time, and they should have listened to the other 2 or 3 people. So, risk management in everyday life, right? See, we're not just dropping knowledge of Forex, we're covering the whole gamut for you guys. In any case, no surprise, the magnetism of this whole zone, you gotta look at a weekly chart to see it, but the magnetism of this whole zone up here, I have talked about and talked about and talked. The market's just going to pull right up to this point. What it does from that point, it'll probably pause and it'll spend some time balancing. This could be a huge zone of $4 that it balances in this area. So if you want to flip that on its head, looking at a euro chart, right? We're at the bottom now that we were at pandemicness. Okay. Not good from the perspective of purchasing power from a European perspective, right? But the lows we saw in 17, I think just like those highs on the dollar, I think this is an area that is attracting price, right? What it does when it gets to a big other area of support or resistance is completely upon how long it was there, what time it spent there. There's a whole bunch of other stuff I'm not going to go into that I could talk for 6 hours on that it does when it gets to these areas. But the key is that you, as the listener, if you've been paying attention, you've been very, very aware that shorting the euro on bounces has been far better trade with a considerably higher win rate than going after the falling knife. Okay, and that's been the case almost exclusively across every major pair with the US dollar, right? So there's my advice for the week in one fell swoop without getting into a lot of detail. Yen, it's been a different story. I mean, this is a troubling chart for a whole host of reasons that I talked about ad nauseum 2 Saturdays ago. Please listen to the cast; it will do you good. I prepped for that and talked a lot about and ground in some back padding with my boy Al from the Macro Compass. So, and what else? Take a look at one other thing here. Wow, look at that. Here you go, guys. Get to brag about my kid. Um, the level of genius of this kid's the abilities are beyond me. um, I almost need to put him in private high school, which we're actually considering doing because this kid is just absolutely testing out of his class. So if he were to graduate this spring, kid be valedictorian. Um, so May 4th, Jackson Heights Award Nights. We're looking forward to it. Good stuff. I don't know. What else should I buy Evan, my kid? I don't. He's already got everything. He actually wants one of those Corsair gaming computers, those liquid cooled things. So maybe I'll have to get him that computer. In any case, I digress in family events. So thank you for bearing with me. All right. So let's see. What do we got here? Honestly, this is one of those things where I'll go out into Twitter. There's a ton. I guess if everybody talks about Twitter, you're probably sick about hearing it, but there's actually a ton of good stuff on Twitter about all this. And let me see if I can make this bigger. There we go. Just Google JPY decline. Right, get other people's opinions. Right, I'm not the be all end all. A lot of times I'll connect my research with other individuals as well. But all right. So Yeah, I think that's pretty much all I want to say. Usually you have to go to when you see a weekly chart and you're like, well, I'm down here in no man's land or I'm up in the nosebleed section. You have to go to the monthly charts for this stuff, right? The yen hasn't seen this type of decline. And by the way, we are, if there was ever like the longest term support line, you're looking at it right here. It just crashed through it. Doesn't mean it won't bounce back above it. A lot of times these reactions have to be oversprung in order for it to snap back. But this is actually a really good example of a market's just peeling back and overshooting, which more likely is outside the Bollinger Bands on that. Let's take a look at that. We really just don't pay enough attention to. By the way, this is Euro JPY, so you got to start looking at weeklies on most of this stuff. Let's take a look at. Yeah, so we're riding the Bollinger Bands up on the weekly. I mean, look at that. I mean, that's just it's rare stuff to see. It's very overblown. So more than likely, obviously we're in a pullback week that would expect if we look at the dailies on this. We've really gone way up and out. Let's see, we were on a monthly. Look at that. When was the last time we saw a monthly? Forget about the pandemic, right? We never got even outside the pandemic on this on a monthly. Usually when you see moves this big, and I don't know about today, but if you saw moves this big back in these days, this whole area I'm circling, it's about like 2007 to 17, a whole hedge fund would have blown up on this move. You'd find out about it in the news. They've been much more diversified. I think that's somewhat, but this kind of movement can just absolutely make your year and turn you into a billionaire if you put enough on it. So essentially, we're just all rolling, putting it all on black, right? So it's crazy to see. I'll be teaching moments on this stuff for me for years to come. But I don't have a lot of time to talk today, so I wanted to just address a few things. I wanted to go through this. Take a look at Bitcoin real quick. Going back to the weeklies on this. I wanted you guys to see the support zone that's formed right around 38 on the weeklies. So it's holding for now, which means if it spends any significant time below this area on a weekly perspective or closes below this line, we're probably going to shoot for those 31-ish lows. And people just aren't talking a lot about Bitcoin anymore. It's crazy. So at some point it's going to lose its luster, I've got to believe, and then go back down to this long-term 20K area. How it acts once it hits that area, the riskiest stance would be to try and catch it as it comes right into that area, which I don't necessarily have a problem with, considering it would be essentially 1/3 of its value approximately at the high, right? There's nothing wrong with trying to catch a falling knife, only and only if it's with a small amount of capital and you completely are okay with the fact that it could evaporate on you. And if you're okay and you say, hey, Steve, I got $1,000 or $5,000 or 10 or whatever the number is, and you can, make that happen, do it. But just be prepared to average down. This particular coin is probably one of the more rotten suggestions I could make in terms of averaging down. But I think at some point it'll probably be back to the 70. Who knows? It could be years from now for my matter. But even if you got in at this point and it took years to get back to the 70, you were holding on. In this case, you were holding on for dear years, right? It will pay off for you, and it would be a great investment. It may take a while. I could be totally wrong, and this thing could go back to its long-term average of right between 5 and 10,000 a coin. The fact that most people don't believe it, won't agree to it, is usually your hint that there's a chance for it happening, because this particular coin and many others have lost between 70 and 90% of their value in the past. more than a few times. So, so just take that as a with a grain of salt in all of this, and do your own research on that. What else did I want to address? New lows for Swissy. I think there's some canary in the coal mines here. Really do. This has been surprising too. Really. I mean, like this thing's lost almost 4,000 pips off of the high. It's freaking crazy. Or I should say just in the recent move. All right, cool. So we'll leave it at that. So everybody be well. Hit me up on Telegram if you got any questions or anything. And may the trades be with you.
There is a substantial risk of loss associated with trading Forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.